Spotify is really now becoming the Netflix of audio streaming. So we saw, really strong subscriber growth, and this was the first year with 2024. This was the first year that they actually swung to an operating profit. And just kind of going forward, Alex and Paul, all of the momentum, all of the growth levers are in place. So exactly what we're seeing for Netflix kind of play out in terms of subscriber momentum and in terms of profitability, in terms of pricing power. All of those catalysts and levers are in place for Spotify.
The stock is up 10, 11% today, up 35% year to date, up 170% over the trailing 12 months. Today's intraday, it is an all-time high for the stock, giving it a market cap of $122 billion. Geetha, who does Spotify, what's their competitive environment? Who do they really compete against?
Yeah, it has been a really, really tough competitive environment when they first started out, Paul. So, you have Amazon in the space with Amazon Music, you have Apple Music, you have YouTube Music. We had TikTok also competing a little bit in the music space. But, all of that competition seems to have really died down quite a bit. And I think this is because of Spotify's relentless focus on product innovation. They keep adding new features, they keep adding new products, and their UI simply is unmatched. And that is why people like it so much and don't want to churn. So Spotify right now, if you look at the global streaming market, has over a third share in terms of subscribers. So they have about 263 million premium subscribers, and they have over 675 million monthly active users. So all of those potentially could convert to subscribers at some point. So again, it's just product innovation and relentless execution that has really paid off for them big time.
And before we go to Disney real quick, but all the innovation is going to cost them at the margin front, no?
It did. So yes, it did cost them. And remember, a lot of these costs and why they didn't have a lot of pricing control initially was because initially in their relationship with the music labels, most of their listening is of course with music, and all those rights holders are the music labels, the Warner Musics, the Universal Musics of the world, and really most of that revenue that Spotify generated was just flowing through to the labels. It's a very delicate power dynamic between streaming platforms and the music labels, but that balance of power I think has shifted a little bit. So Spotify has really gone from a price taker now in the relationship to a price maker, and so they're having a lot more leverage. And along with those shifting dynamics, we're also seeing them kind of invest a lot more in their own content. So podcasts, for instance, owning audiobooks, bringing new types of content where they have a lot more leverage. That's giving them basically, a lot more better unit economics, and a lot more operating leverage in the model.